Investors frequently talk about the stocks Palantir and NEO. The stock prices have recently been swinging up and down due to market concerns. Many experts remain upbeat about the future of these firms despite the turbulence. In fact, a recent price estimate of 29.65 for Palantir has increased interest from investors in the business. Welcome to our channel, Financial Experts. We'll go through this reasonable value study to see if this intrinsic estimate is indeed right, and of course, I'll add my personal opinion to that. After discussing many details, let's finally discuss their most recent price objectives and projections. Starting with the fundamental estimate of Palantir Technologies' current total fair value. Palantir Technologies operates as a big data and analytics business that focuses on artificial intelligence with extensive language models, as you undoubtedly already know. The private business sector and the government agencies segment are two primary divisions of this company. Palantir Technologies is a giant in its esteemed field. You must be aware of the assumptions that will be used in our overall calculations. For instance, we must first discuss the company's 10-year free cash flow estimate, also known as their FCF forecast, which must be done from 2023 to 2032. You can see all the metrics we're using here on the screen, and when we do the math, we as species can discover that their present value of a 10-year cash flow is roughly $17 billion. However, I do want to draw your focus on the discount rate we're using, 8.1%, because that's another assumption we're making that will be factored into our overall model once more. The terminal value, commonly known as TV, and the present value of the terminal value, shortened as PVTV, will be calculated in this example. Therefore, whenever TV would appear, that means that right there, you would plug that into the formula for the current worth of the terminal amount. By doing this, we may actually calculate the terminal's current value's present value, and this comes to $45 billion. Using this $63 billion market cap, we will then arrive at a price seek of $30 for the company's estimated fair value and intrinsic value, which indicates that it's about 49.3% undervalued overall. What do I consider regarding these numbers now? I believe they are extremely hazardous, especially since we will only be using one analyst in 2027, not even in 2026. I personally don't agree with this and believe it's rather too high for a fair value assessment of this entire company. The discount at 8.1% is a touch suspicious, but overall this is a reasonable and rational assessment. Although people can have different opinions since according to Morningstar, the company has a price target of roughly $9. I think they also employ a discounted cash flow methodology or perhaps another technique to determine this overall fair value. It's possible that you'll experience either of these outcomes, thus they both exist. As a result, in my opinion, I don't use this to figure out what the share price may be in the future, as well as what it should be selling at right now. Instead, I use this as a chance to predict when I should acquire this firm. This is how I use these general estimates. For example, if the firm ever dropped below $9, that's when I would buy it. If the business ever flew beyond $30, I would simply liquidate my entire stake and take gains off the table. The fact that Palantir has been directly collaborating with the Ukrainian military to combat Russia is already widely known. Considering it is supplying its most popular item directly to the Ukrainian army, Palantir has been aggressively collaborating with Ukraine, especially with their Ministry of Digital Transformation, which implies Palantir's technology can be put to the test in combat, which is excellent for the corporation as a whole. The exact way Palantir solutions are helping the Ukrainian army was even discovered by Ukrainian journalists, who have written numerous pieces about it. However, many of these accounts slipped investors' notice, and I believe they provide invaluable insight into power of Palantir's technology, particularly in tumultuous situations like war. Palantir's data has been heavily used primarily because it offers satellite imagery services via the Meta constellations. As a result, Palantir is able to provide Ukrainian forces with access to software that enables them to more effectively target Russian armor and equipment and conduct investigations and inspections on occupied areas. Because Palantir's products are so helpful on the front lines and are actively used, additional government enterprises that are following the course of this battle have decided to invest in Palantir Technologies. You can read this post if you're interested in learning more about their most recent updates. Let's talk about this more gloomy essay. Albeit, I don't have many complaints to level at the author. I believe his assertions to be extremely reasonable because they are all true, as can be shown by looking at the company's overall stock chart. This increase primarily followed the company's promotion of its new artificial intelligence system, or API. Palantir Technologies presently trades between $15 and $16, alongside a market cap of around $30 billion. And since artificial intelligence has recently been hyping up a number of businesses like Nvidia, Palantir, C3.ai, and few others, it makes logical sense why Palantir got a substantial boost. Now, this isn't to say that Palantir is going to pull back and then begin a long downtrend. It simply indicates that after the company pulls back in its general share price, it might start a different uptrend. It's really very healthy for an investment to pull back, as opposed to seeing it continually surge and then entirely drop off a cliff. And this would be disastrous for investors. In their most recent earnings report, Palantir showed an 18% CAGR for their annualized rate of growth or revenue growth rate, which they also generated an adjusted profit per share of 5 cents, as the writer also accurately points out. Yet, the organization is currently projected to continue growing at around 16%, and this year that they are anticipated to generate around $2.2 billion, but for quarter 2, particularly Palantir. Look at what other economists are saying concerning this company currently. The consensus price target given to this company is roughly $9.54 or $10, meaning that analysts are predicting a decline of around 36%, indicating that this organization is overvalued right now. The corporation has a ton of cash on hand, totaling $2.9 billion, which is one of the advantages mentioned by the author. It is really outstanding in my perspective to have nearly no debt, excellent free cash flows, and decent adjusted earnings. You must be aware of these important investing takeaways. Last but not the least, let's talk about NIO stock, a Chinese manufacturer of electric vehicles. As I've previously stated, this company is expected to crash until it begins to ramp up in quarter 3, which won't happen until most likely the quarter 4 earnings report. Recently, NIO shares have dropped by about 58%, completely decimating shareholders, but today, NIO shares have recovered by about 5.83%. Decreasing by almost 58%, indicating the company's slower than expected growth and the fact that the most recent earnings report didn't really provide us with any encouraging data. The stock is now trading at about $8. Negative experts estimate the company's value at $6, and we currently experience many price reductions. Following the release of their results, some investors and industry experts are still quite optimistic about this firm and believe that it might soar to roughly $25 when we take a look at its good PS accounting ratio. It is 1.75 times less expensive than Palantir's 14 PS multiple, which is very high ratio. I think NIO is quite distinct in terms of service and technology from their electric vehicle peers across China, especially revolving around its battery swapping technology. They additionally offer very impressive electric automobiles that are premium, and I really like the respective positions battery as service models. I view that as a long-term play, meaning that I'm unlikely to continue to sell as long across the next decade. Despite the fact that they are not yet profitable, which is a major worry for investors, there are still reasons to be optimistic. The author identifies some key factors. The first is a near-term catalyst because they recently released their E6 SUV, which obtained over 30,000 pre-orders in just 3 days after their launch notification in May. Additionally, they have very diversified and remarkable range of varying vehicles and vehicle options for people to buy. There are many more remarkable reasons for it. Thanks for being to the end of the video. Don't forget to like, share, subscribe, and tell us what you think about this video below in the comment section.